So good morning students. Today we are going to discuss regarding a few transactions which relate to C.R. and Sons company. Okay. So here is the illustration or the question given. Okay. From the following transactions, enter the following transactions in the journal of C.R. and Sons. Okay, so in January 1, 2020, okay, there is introduction of cash into the business of 50,000. Then goods purchased goods from Subhash, purchased furniture for cash, and paid cash to Subhash, purchased goods from Ravi for cash, then purchased goods from Ravi and bought machinery for cash, then paid rent. Okay, so here you see in the books of C.R. and Sons, okay, journal entries. So the first journal entry is C.R. and Sons started business with cash. Okay, so here cash is introduced into the business. Okay, so cash is an asset. Okay, when asset increases, it should be debited. So cash account is debited, and at the same time capital of C.R. and Sons gets increased. So to C.R. and Sons, okay, capital account being cash introduced into the business. Got it? Then you see purchased goods for cash. Here there is a purchase account. Okay, so since there is a purchase, so purchase is an expense account, and we know that increase in expense, okay, should be debited. So purchase account is debited, and again it is purchased in cash. So cash is an asset, so asset goes out, so it should be credited. So being goods purchased for cash. Then here you see purchased goods from Subhash. Okay, so here purchased goods from, since the name of the person is mentioned, that means what? Okay, the purchase has been made in on credit. Okay, so when there is a credit purchase, the name of the person should be mentioned. So purchase account, expense account, so it should be debited to Subhash, okay, which is a liability at the same time. Okay, liability increases, it should be credited. Same here you see purchased furniture for cash. Okay, so furniture, it is an asset, so asset increases, it should be debited. At the same time cash, which is an asset, it decreases, so it should be credited. Okay, then here you see paid cash to Subhash. So Subhash, which is a liability for the business, okay, here, so a small amount of cash, that is of rupees 8,000, has been paid. So Subhash liability decreases, so it should be debited, and at the same time cash goes out, so it should be credited. Got it? Then here you see purchased goods from Ravi for cash. Okay, here cash purchase has been made. So purchase account debited to cash. Purchase expense account increases, so it should be debited. Cash asset account decreases, so it should be credited, 7,500. Now what is the next entry? Purchased goods from Ravi 5,000. This one, purchased goods from Ravi 5,000. So purchase account debited to Ravi. Okay, being goods purchased 5,000. The name of the person should be mentioned. And bought machinery for cash. Machinery, which is an asset account, it has been purchased, so machinery account debited to cash. Cash goes out, so it should be credited. Machinery to cash. Then paid rent account debited to cash account. Rent is an expense, okay, so when it increases, it should be debited. And cash, which is an asset, okay, when rent is paid, cash decreases, cash is an asset, so it should be credited. Got it? So that is how we pass the journal entries. Okay, so I hope you have understood. So if you like my video, please for God's sake subscribe my channel, please. Thank you.